plus our stock of the day. So let's start with that, of course. And not really a small cap anymore, but it was once. Telix Pharmaceuticals. It says the US Food and Drug Administration has accepted its resubmitted application for its brain cancer imaging agent Pixclara. The product has already received orphan drug and fast track designations with clinical use supported by international guidelines. It says its 2026 guidance does not include any contribution from that drug. So, just how well placed is it, particularly as it makes further inroads into the US? Luke, what are your thoughts?
Yeah, look, it's one that I focus more on the micro cap end of small caps. So up around that 4 billion market cap, probably not one I'm looking at every day, but a real success story on the market, Andrew. And to be honest, I think biotech's on the ASX, healthcare maybe broader, the likes of CSL, Cochlear. It's been tough for investors in that space, and obviously on the 1 year chart, Telix is like that. But as I said, been a real success story over that sort of 5-10 year view. They've got an insanely profitable business with that core Illuccix product. Looking at that 4-year result that they recently announced, they report to the calendar year, 214 mil EBITDA just from that core precision segment alone, driven by that Illuccix product. I think what's hard for investors, and unless you're more attuned to the biotech life sciences space, is it's a business that is quite open about the fact they're taking that cash, they're taking that profitability and reinvesting it quite heavily back into R&D, into these new products. Obviously, that announcement today fits into that, and it's good to see. It's a bit hard for your generalist investors to sort of get a feel for 2-3 years out and then beyond what these new products will look like as they come back to revenue. So I think as an ad hoc, maybe just falling back to, well, what am I paying for the Illuccix business just today? About 20 times EBITDA. That's not cheap. It's sort of the upper end of what you'd pay for these sorts of pharma businesses, but given the growth and given the profitability, I can sort of see that rationale. So I'll say a hold, because I think you're paying call it a fair price for the profitability and revenue generating segments today. And then of course you're getting the lottery tickets, the shots on goal from the R&D pipeline, and more importantly from a business and a management team that's proven they can bring products not just to market clinically but also execute commercially as well. So one I don't mind given the pullback. I will say a hold though. Maybe just wait to see a few of these products hit commerciality.
Matt, what are your thoughts?
Very similar view to Luke. Incredible success story. I mean, this stock IPO'd, I can't remember the exact price, it was 50 cents for a dollar, and now it's $14, $15. So it's got an incredibly driven management team, very well aligned. Done a great job building that base business with now 2 approved products selling in the US and globally. You look at the first quarter update they released the other day, slightly ahead of consensus. We could see upgrades for 2026 if that momentum continues. So as Luke said, the base business is actually traveling along really well. The issue though is they plow money back into R&D. So when you look at the numbers this year, there's about $1.4 billion of revenue and very little at the NPAT level. So that translates to a PE ratio of over 100 times, which means they're investing a lot, the market's paying up for some of these growth options. There is something in the share price for these new drugs in the pipeline. You'd probably back Telix to say they can do it, because they have done it a couple of times before. They know how to navigate the landscape over there. Biotechs in our process are a bit too hard. We just don't like the binary risk. We tend to find with things like biotech, oil explorers, some of these binary outcomes, they tend to be skewed to the downside because there's always hurdles that come up. Things take longer, there's things that aren't foreseen. Even doctors who cover these stocks on the sell side and know everything as well as they possibly can get it wrong quite often. So that makes these things a little bit difficult for us, especially when there is value in the share price for some of these new drugs in the pipeline. So I'd probably say similar view to Luke, it's probably a hold, maybe on the weaker side for us, just because it doesn't really fit the process. But I do like the management team, I like what they're doing. There is some optionality there, so if you do have a high risk profile, it could be one for you. It just doesn't really fit in our fund at the moment.
Do you see sort of compelling value? Because it's off more than 40% over the past year. Now, a lot of that was maybe a misinterpretation from the market, just in terms of obviously having to resubmit to the FDA.
Yeah, and that's exactly it. I mean, there have been delays and issues with the FDA there over the past few years. I think the stock got very overheated. You look at the valuation back a couple of years ago, it was probably well above where it should have been. So I'd say now we're trading more towards kind of fair value type levels. Maybe an opportunity. I mean, it just depends on, do you take a view that the drugs in the pipeline are going to get approved on time and commercialised as the company expects? If you believe that story, there should be upside. But as we know with drug developers, there are always speed bumps on the road. There are always things that go wrong. So I'd like to see it pull a bit further back, where you may be paying a bit less than sort of the fair value for the base business, and you're getting free options for the new drugs coming through.
All right, that is the view on our stock of the day, TLX. It is a double hold.